Hi, my YT fam, bless you all. Today we're going to talk about the 5-step model for recognizing the revenue as per IFRS 15 or Ind AS 115. So I have taken the reference of Icai module, so now let's cover all the points. So the 5 steps are: identify the contract, identify the performance obligation, determine the transaction price, allocate the transaction price to performance obligation, and then recognize the revenue. So point number 1 is identify the contract. So contract should be legally enforceable and all the below conditions, they should be met. So there are 4 conditions. First, contract should be approved, then it should have commercial substance, and right to goods and services and payment terms should be identified, and collection of consideration should be probable. If all the conditions are met, then it is considered as contract is identified. Point number 2, identify the performance obligation. So performance obligation is basically the promise to deliver goods and services that are distinct. So the goods and services will be considered as distinct if there are below 2 conditions, and they should be satisfied. First, customer should be benefited from those goods and services on its own or together with the other resources that are available in the contract. And second, entities promised to deliver goods and services, they should be separately identifiable from the other goods and services in the contract. So if these 2 conditions are met, then they will be considered that the goods and services that are promised to be delivered, they are distinct. Third is determine the transaction price. It is simply the consideration that entity expects to receive for their sales or services rendered. Fourth is allocation of transaction price to performance obligation. So that is done on the basis of standalone selling price. Let me know if you want to understand this with an example. I will prepare a separate video for that. Now we have to recognize the revenue, which will depend if the performance obligation is satisfied over the period of time or not. If it is not satisfied over the period of time, then revenue will be recognized at the time of transfer of control of goods and services to the customer. There should be a transfer of control of goods and services. Now, what if the performance obligation is satisfied over the period of time? If it is satisfied over the period of time, then there are 3 conditions for recognizing the revenue. So any one condition is fulfilled, then the revenue will be recognized. Any one of them needs to be fulfilled. Number 1, customer receives or consumes benefit provided by the entity's performance. Or number 2, entity's performance creates or enhances any asset that customer owns. And number 3, entity's performance does not create any asset that has alternative use for them, and they should have legally enforceable right to payment till the date of performance. So this is how we will recognize the revenue. Let me know if you want to understand any of the terms mentioned in this chart. I will prepare a separate video for that. And let me know if you want to understand anything about IFRS 15 or Ind AS 115. If this was helpful, please like, share and subscribe. And thank you so much for watching.